Hello traders and welcome to another video review. Today is Monday, July 24th, 2023. Let's find out what's going on the Forex economic calendar today. What are the most important data released or scheduled for release today? We got already seen the actual reading of the German manufacturing PMI data for the month of July, and it deeply disappointed the market participant. Actual reading was 38.8 while the forecast was 41 points. This is not even lower than the forecast, it's even lower than the previous reading of 40.6. So German data disappoints. Euro should weaken across the board. S&P Global and CIPS UK manufacturing PMI index released just recently disappointed the market participants again. Actual reading was 45 points while the forecast was 46.1, and that was even lower than the previous reading of 46.5. So British pound is losing across the board during the London session. What is still ahead of us is the S&P Global US Services PMI data scheduled for release quarter to 4 p.m. and this time the forecast is 54 points and the previous reading was 54.4. So those are the most important data that are still ahead of us. So US dollar is in focus. Next, what we will focus on now is of course the technical part, so let me just switch to the first chart, and that's going to be euro dollar. The market reaction on the poor data from the Germany resulted in a big candle to the downside, and right now the market is approaching the level of 1.1012, which is the key short-term technical support for bulls. In that situation, we already went down a kind of a while from this situation here at 1.1276. Of course, this is the swing top or swing high, and right now we are just trending lower and lower. The market on the lower time frames keeps making the lower lows, and it doesn't look like it wants to go up soon. Nevertheless, what do we have here is extremely oversold market conditions on the 4-hour chart, and we are right now testing the 100 periods moving average. We just went a little bit below this moving average. The local low was made at 1.1067. Nevertheless, it looks like we should expect some kind of a small bounce, maybe towards the intraday technical resistance at 1.1109. Please notice the fact that this is still kind of a very difficult situation for the bulls because we are still under the bearish pressure, and it looks like if the intraday technical resistance is not clearly violated, we cannot actually say that this pullback to the downside had been completed. So screenshot is done. That was the euro dollar. Let's switch to the British pound because this pair actually reacted on the data as well, and the same reaction occurred. We got the new local low 1.2807 after the data was released, and as you can see, we are trading below the 100 periods moving average and below, of course, the 50 periods moving average in the negative market territory. Negative conditions, negative sentiment prevails on the British pound. They are trying to bounce from the extremely oversold market conditions, but this movement to the downside still is extending lower. So right now we are trading below 1.2847. This is unfortunately now the technical resistance for this pair. Of course, the swing high resistance at 1.3141 is still valid. So maybe, just maybe, some sort of like a kind of a, let's say, a wedge is being played out here. Why? Because it looks like there might be some kind of a movement to the upside due to the negative divergence. The positive divergence on this market. Nevertheless, we are keep making lower we are keep making lower lows. We are still on the British pound under the bearish pressure. I don't know if that kind of a wedge will make the bulls more confident about the bounce to the upside. If not, then we should expect another extension lower towards 1.25 and 90, because this is very important technical support from the end of the June 2023. So that's the technical situation on the British pound. Let me just take the screenshot and off we go to the US dollar index. So US dollar index should gain when the euro dollar is going down, and this is what is actually happening on this market. This very nice technical resistance located likely between this level of 102.02 and 101.89 will be the key technical resistance for the bulls. As you can see, they already reached the extremely overbought market conditions around the 100 periods moving average 101.26. The local high was made 101.38, so kind of a 12 pips higher. Nevertheless, this is still a situation when the market is actually trading in during the extremely overbought conditions on the extremely overbought levels. Where are the supports now? Because if we should expect some sort of the let's call it a pullback, then 100.69 is the target, and maybe even the level of 151 is the next target. Of course, the key technical support is still located at 99.55. It's a very important technical support. So let me just put my line into this, make it greener. Okay, so you guys can see it, and this one is no longer necessary. So that's the current situation on the US dollar index, and it looks like it's in the in harmony with the other markets, because as you can see, euro dollar going down, British pound is going down, which means traders are selling euro, selling dollar after the data triggered the sell signal, and of course the other pair, which is US dollar, is gaining across the board. Nevertheless, both US dollar index and euro and the cable are on the extremely are trading during the extreme conditions, extremely overbought, or in reverse, extremely oversold. So please pay attention to the current market behavior, because the pullback might happen anytime soon on all of these major markets. So that's the review of the Monday morning, Monday London session. So stay focused, stay vigilant, because there's still services PMI data waiting for the release during the New York session. And that's for now, it's everything for me. Majors has been discussed. I hope I will see you guys tomorrow. For now, take care and bye-bye.